2026. And here's the thing. November is not just another month. We're sitting literally at a pivotal moment where AI is meeting healthcare, where energy companies are printing cash like there's no tomorrow, where scientific breakthroughs are happening faster than most people realize. So the stakes, missing this window could mean watching from the sidelines while others capitalize on some of the most powerful trends in the market. By the end of this video, you will know exactly what I'm looking at and why these 5 companies could be massive winners. Now, let's get into it. I'm Felix Preen. I'm an ex-investment banker. I've seen how the system works from the inside, yet none of the following is financial advice. I'm not telling you to buy companies. My goal is to show you the process, show you the data points I look at to find what I think might be gems. But you got to come to your own conclusion. Otherwise, you're going to get left really behind because you're going to be acting out of FOMO, and that's the worst thing you can do. That's also why I founded the Goat Academy, where we've taught literally over 20,000 students how to invest like the pros. And that's also why I co-founded TradeVision.io to give you regular investors like you and me the tools, the data that we need to actually compete. So my mission here is simple. I want to teach you how to think like an institutional investor, but trade and invest like a smart individual. Because when you understand what's really driving the market, you stop gambling, you start investing. So today, I'm going to walk you through 5
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Stocks across 5 completely different sectors. I'm not just telling you what to buy, I'm teaching you how to think about these opportunities so you can make intelligent decisions yourself. So please.
All right, I see what happened. Trump's energy stocks will help you retire. Today, the market is down significantly. There are certain stocks that are holding up. One of them is energy stocks, oil and gas stocks. And this ticker, Halliburton, ticker symbol HAL, had about $5.5 billion in revenue, better than expected, and also has improved just count of oil rigs, but also the North American demand was high, which was good for this company. So let's take a look. There's not a lot of merchandise to buy today, so this is a rare glimmer in a very red day. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is the stock. This is the best place to buy it, around 26.25. And we can see that the second day it closed. Traditionally, you would say the high volume level is 25.25 the first day it closed, which is right about here. You can see a lot of volume there, high volume. That's the close, but it's a better lower risk entry to use this following day, which you can see it tested a handful of times, including couple of days ago. And right now it's close to that level as well. So risk $1, $1.50, and try to make 5, 10 or more. Now, interestingly, Halliburton holding up today, along with a lot of other energy stocks, Exxon, Chevron, holding up, PARR, DINO, a little red. But basically what we've got going on is the price of oil is up a little bit today, largely because it dropped quite a bit yesterday. So this is just like kind of a little nuance that is not very big picture, but it does help get positioned in a stock like Halliburton, given that if you look at the market as a whole, this is not pretty at all, right? I mean, the only reason it's not very, very frightening is we saw this day just a month ago, almost exactly a month ago, actually, on the Trump Xi talks. So Bitcoin not nearly as big a move down as that day today either, but pretty much everything is down. Banks down. Home builders notably okay. Still down a little bit. I guess healthcare is the one that's actually doing well. Yeah, XLV. So if we look at Eli Lilly, that's holding up. Merck holding up for sure. XBI kind of, pulling back a little bit. So you could say there's the strength, oil and healthcare. Healthcare is not the easiest one to buy, but it is notable just to keep that on watch. I mean, after it's just gone 2 green days in a row, I'm not sure you want to buy it up here. And by it, you are pretty much talking about these big companies. Novo Nordisk actually pulling back a little bit. Strong moves that are big percentages of this healthcare ETF. So we're keeping that on watch. But as far as that's kind of just giving the rundown on how you get to a stock like Halliburton to buy. I mean, part of it is this earnings reaction for sure, but it's also the market backdrop today. So that's the reaction. The earnings per share did beat. The revenue also, it did exceed expectations. We can look at exactly what it was, but there's a little more, a couple $100 billion more than expected. Sorry, I've got multiple chat GPTs going on here. There we go. This should be better. Here's the beat, and here's the revenue beat. Couple $100 million more. So this is why strong performance in U.S. land, Canada, and tool sales in the North America segment. Not so much in ESEA or whatever that's called. Middle East and Asia. This is a big deal as well. For these refinery stocks, anytime they can become more efficient, that's really, really good news. There have been some other oil stocks that have been doing well recently. I've mentioned some of them in here. Not just the solar stocks like Array, but some of these stocks, VLO being the notable one, if we take a look at that, they had something like 97% efficiency and throughput, meaning they're using basically all of their refining capacity. They're getting their oil from Chevron and then refining it. And with such high utilization, that's very efficient. It means they don't have a lot of excess costs. So this company's doing well as well. You can see just like all the other oil and stocks, gas stock, it's holding up. This is just an idea from a few days ago that I think is very relevant as well. And it's in the same sector as Halliburton. But that's the idea right now, HAL. It is the stock you've heard of. They're the subcontractor or whatever. They have some contractors. They are a large oil drilling, production, optimization, the biggest, I think, oil and gas contractor that there is. So, yeah. This is the revenue value from North America, $2.4 billion, which beat analysts' estimates. So I believe that was the main driver for that move up. Although earnings reactions can always be a little nebulous as to exactly why they happen. Case in point, Microsoft, which went down significantly even after they cleared up that OpenAI equity confusion. So that's the idea, HAL. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. You'll see some testimonials.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, guys, I think the videos are going to be much better when they have audio, the microphone turned on. So that's good. Good.
Please make your own decisions.
Motivation.
They'd rely on me. Now, the stocks are not going to hold you hostage straight away. They are here. XOM, TXG, DNUT, and Zyme. This is a tool that I have inside of our community. You can get access to that. There's a link down below, felixfrenzelog/resource. And we're going to look at the data, we're going to look at the charts, we're going to look at what's driving these. So the first stock is literally called A. That's a ticker symbol. It stands for Agilent Technologies. They're the
All right, let's not worry too much about that. Let's jump into this healthcare company, cancer detection company. Yeah, and they've got some cash, so that should be enough to start with. Recent IPO too. IPO'd just in June of last year. So earnings per share, narrowing loss. And the company is called, drumroll please, Grail. Okay. This one stock can change early buyers' lives. This is not financial advice, but my research suggests it's a good idea to buy as much as possible before November 24th. The company is Grail, ticker symbol GRAL. It IPO'd in June of 2024, so just about 18 months ago. They're in the healthcare space. And notably today, the healthcare ETF, XLV, holding up significantly, even as the market drops. The biggest drop since now a full month ago, since Trump Chi rare earth conflict led to a big market drop. Bitcoin crypto liquidations were massive on that day, October 10th, a month ago. So it's been a month since then. We have another big clearing out day, and this one stock is holding up relatively well in a sector that's holding up super well, healthcare, even as the market falls. Let's jump into a little breakdown.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is Grail. They do cancer detection. That's their mission. They can identify multiple cancer types in early stages using some sequencing and basically gathering a bunch of big data. So a combination of large data and also this platform, I don't know what methylation is, but it sounds fancy. They're in Menlo Park, so they're Silicon Valley through and through. And this is what their raises were, 300 million and then 100 million just this month, really, like about a month ago, around $70. And we can see, looking at the price, that's a pretty solid price to raise at, considering the stock was at $34 a month earlier. So just had earnings. The loss is less than expected, than estimated. And today, yeah, it's down a little bit. But when you look at the market as a whole, the market is down a lot. So this company definitely looks solid in comparison. And as mentioned, if we look at the healthcare ETF, big move up last few days, driven in part by Eli Lilly and Merck, big moves. Novo Nordisk, not so much, but, you know, definitely a move after earnings. Pfizer, same deal. This is in that category. And this is a nice flag regardless of this earnings. This earnings didn't really impact that flag much, which is actually, in this particular case, kind of a good thing, because it gets you right in that spot where you can buy without risking much. You maybe risk $79, a couple bucks to make 10, 20 or more. So that's how it became or becomes interesting. Earnings doesn't always help. I mean, you saw this Etsy flag absolutely collapse on earnings, but sometimes it can be pretty useful. So GRAL setting up. And in terms of similar tickers, Guardian Health, one that is a pretty nice earnings reaction, similar to GM actually. The tickers just happen to be really similar, but Guardian Health holding really well, and that's a great example for what's to come for Grail. Grail. The ticker is GRAL. EXAS, another reaction that's similarly solid. So keep an eye on those, but in general, this is definitely a speculative space, aka the cure for cancer has not been found. Early detection for cancer is a very commonly explored startup space. So I don't know what to say except to say we can invest in this for the next month or so, and so far it seems like a good idea to get in right now. This revenue is modest, is maybe an understatement, 30 million. But you know what? Yes, they have a big net loss, 100 million plus. But the move in the stock is pretty wild. And when they raised all that money, which we saw here at $70, we can look exactly. October 16th and 20th puts that right around here and here. So they definitely raised lower than the stock price at that time. So it's not surprising we kind of retested 70s or your very low 70s and still holding up above that level. So you know what? If they lost 100 million, but they have 600 million, it doesn't give them a long runway, but it definitely shows the ability to raise money. I don't know if this is exactly correct. I mean, I know the calculation is correct, but it doesn't sound like they actually have 2.5 years of the current amount of money they have. But this is rare to look at 2 private placements within 4 days. That's, usually not how that goes. Promising top line results from this study. It's a lot of participants, and anything could happen. But this isn't like a dangerous biotech company, and I don't mean dangerous in the sense of what they're up to, but well, a little bit actually. There is a company recently, NTLA, which recently had a big drop based on a participant having a major side effect, and then QURE not having a control group, so the FDA was not happy with that. That also was a big drop, although there's some speculation that FDA member was doing this out of spite or something, but this isn't that, okay? This is a machine learning data company, so it is healthcare, but it's a little different. So that's the idea. If you like these ideas, hit that like. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want a $25 trial for 7 days, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. Let's see if we can muscle through this here. The difference between 6
Visible
videos
giant
and 7
that's
videos is
powering
like
modern
night
medicine.
and day.
Now, most people have never heard of this, but it's absolutely crucial. Life science tools. Think about this for a second. Every single drug you've ever taken, every vaccine, every cancer treatment being developed right now, they all depend on super sophisticated equipment and tools. The companies making these drugs can't do their job without the machines that help them discover it and test it and manufacture them. And here is what's actually really exciting. This industry is about to go into hyperdrive. We're talking about a market growing at over 7% a year. Some forecasts showing the US market alone hitting over $270 billion by 2034. And that's driven by 3 forces. First, personalized medicine. It's becoming real. Instead of giving everyone the same drug and hoping it works, doctors are now tailoring treatments to your specific DNA. And that requires incredibly advanced analytical tools. Second, pharma companies are spending money like...
Okay. Selling their instruments to China. TMO. Up today, I gotta believe. Oh, not quite. Recent earnings is strong. DNA sequencing. 97% institutional ownership. DNA sequencing company. 1 billion. Earnings per share beat analyst expectation. Illumina. Okay. This one stock can change early buyers' lives. My research suggests it's a good idea to buy as much as possible before November 26th. It's not financial advice, but the ticker is ILMN, Illumina. It's a healthcare DNA sequencing company. And China recently removed an export ban on their instruments. So whether they're shipping the instruments into China or out of China, they're basically opening up their market significantly. We'll go into exactly how that ban improves their prospects. The company is also in the healthcare sector. So the healthcare ETF notably up today, even as the market is down a lot. Nvidia got hit, AMD got hit, all the big companies, Tesla down the most. And it's wise to take a look at stocks that are in where the money is rotating. So that's where ILMN is interesting. They did beat analyst expectations on earnings per share, and they have 97% institutional ownership, which is very significant for a healthcare biotech medical instruments company. It really matters for those type of companies to have high institutional ownership. Let's take a jump into what these guys do.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is Illumina. This is their export ban lifted partially. So the instruments are being exported to China, and China is a huge market. Okay, so it's a big deal. There's still regulatory risk present, as there always is with medical device companies or healthcare companies in general. And this is that earnings per share that beat the estimated earnings per share, exceeded expectation. They also raised guidance for full year 2025. And of course, they're getting into the AI, life science discovery. I'm not sure exactly this is drug discovery or what. This is what the company does. DNA sequencing, array-based. That's array, not assay. So I do think this is like a dry lab type of company. I could be wrong. They're so big, they probably do both. But what I do know is the people who really know about healthcare or about medical instruments bought this company. This is a significant institutional ownership, 97%. And it's nice to see that type of institutional ownership. There's another company I was just looking at, Grail, GRAL. And you can see, it's just a younger company, 60% institutional ownership. So it's just a nice vote of confidence to literally see institutions buying the stock. So this is the recent earnings. There's that beat. And holding up this little drop is, a little drop, but this is the XLV ETF. So a little down as well. But in general, this is almost negligible. This is almost negligible. When we look at the stocks I mentioned earlier, Nvidia, AMD down a bit. And then, of course, Tesla down the worst. Big selling there. So if you look across the market, Intel pulling back to that moving average as well. It's been a lot of moves down. And some stocks didn't have great earnings reactions, Netflix, but they were able to recover some. Meta, the idea was that buy the dip might be happening, but as is often the case, you just can't guess when the dip is going to come. real holding up. Some of these earnings reactions are solid, but you have to, again, think about what sector you want to be buying. So the Real is in luxury retail reselling. So it's still a solid company. I've mentioned it yesterday. But now that we have new information about the move down today and the market move down, which of course the QQQ being a significant move for that. If we look at the equal weighted index down as well. And really what we saw was the equal weighted index has basically gone sideways, and all the growth has been in the tech companies, QQQ. That's what's going up. And right now it's really tough to buy the tech companies. There just isn't a super easy spot to do it. So you can keep looking for opportunities. I mean, SoFi selling off, right? Failing that breakout. So you have to look elsewhere. And I think these healthcare companies, ILMN being one of the best ideas. GRL, good too, just a little bit of a younger company. So definitely offering a good opportunity. And I do think that high volume close, this was after hours, so you want to wait for the full close, 124. If you can buy it over that level, that's really solid right here. So good to keep on the watch list. And a little bit more about Illumina. Do want to keep an eye on these other tickers, 10x Genomics, TXG, and Thermo Fisher is maybe the biggest one to take a look at. Not doing quite as well today, but definitely moving strongly up since October for the last couple of months. So keep an eye on that before you take a look at Illumina. And then Pacific Biosciences and 10x, can take a look at that as well. PAC-B is a bigger one. This is not good at all, but the miss is a little bit less than expected. So holding up, I have to think that when you look at these companies in aggregate, they're mainly going up. So that's definitely indicated by this ETF. And when you're looking at an ETF like this, the easiest stocks to buy are the ones that had solid earnings recently. So that's kind of how it works. That's how Illumina sticks out. And I think this idea is solid. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Not financial advice, but I hope it helps. All right. The wheels are coming off. I can't believe that I
Crazy on
misreported
research.
that, but
Their revenues have gone up 60% in the last 5 years, and every dollar they
happens.
spend means more demand for the
YouTube,
tools they need to do their
I can see comments over
research.
there.
And then third, and this is huge, AI is supercharging the pace of discovery. AI doesn't just help analyze data faster, it's completely changing how we understand biology. And guess what? You can't run AI on biological data without the right instruments. So the industry itself is a rocket ship. So let me show you the company that's dominating this space. And it is Agilent Technologies. Now, let me show you the data points for these first. I always look at these key data points here. Can you zoom in a bit on that? There we go. So a gross margin of 52%. I know it says fail. The gold standard is 60, but that's typically more for like a service business. This is actually a very good setup number. The return on invested capital is very, very good. Generally speaking, I look at that number and I think, well, if I want that kind of return, they should be creating that kind of return. They generate pretty good free cash flow, not gold standard yet, but pretty good. They've got plenty of money to pay their debt, and it's trading at 34 times P. You know, your hyperscalers are trading at 45 right now, right? So what do these guys actually do? Well, they make essential instruments, software, and consumables that laboratories around the world absolutely cannot live without. Think of them as the picks and the shovels of the biotech gold rush. So everyone's focused on which drug company might find the next blockbuster. I'm a big fan of biotech stocks right now, but there are like thousands, and finding the right one is a bit like the needle in the haystack, so why not buy the shovel? So Agilent is literally selling the equipment to all of these biotech stocks. And if you look at the stock chart, it's trading around that sort of $145 right now. But if you zoom out a little bit, you see kind of an interesting pattern, right? It's been going up and down quite a bit. It was trading at about 180 in 2021 when the demand for all this stuff is way, 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 way lower. So why do I like it here? Well, for us, this isn't the first time I flagged this in our community. You know, we were looking at this a little earlier because there was a bottoming out here, and then there was the conservative entry point was probably there. I can't remember exactly what we called it. We then zigzagged a little bit here. That was your second entry point there. That was number 2. This is number 1. You might be thinking, how the heck do I learn this? Look, we've got some videos out on this, but honestly, if you actually want to learn this in a serious way, I think you need someone to look over your shoulder. I think you need somebody to guide you. I think you need somebody who watch your portfolio and see what you're doing and spot your mistakes and your errors and see where you need refinement so you become a better investor, a safer investor. And the only way I think that really happens is if you find yourself a mentor. Now, we're doing something bonkers this week, which is my guys.
All right. It's probably enough of that. Okay. Privately licensed wireless data networks. I'm just sick of this. Oh, boy. Okay. Ondis Holdings. This is a drone company. Right? Certainly seems like it, if those are the similar tickers. Okay. Okay. Maybe we'll do one more. It's just a little bit of a comeback. Don't know what to do. Caterpillar. CVI, definitely. Okay. There we go. 1, 2, 3, 4. Okay. So CVI.
Up fast, which causes those stocks to go up even faster, and it causes them to make money even faster.
Don't need cash, trying to raise money. More than 5 times year-over-year increase in revenue. The FAA allowed some of these companies. Yeah. Ensuring American Drone Dominance Directive. Okay. Ondas Holdings. Ensuring unleashing American drone dominance. Trump's drone stocks will help you retire. This is not financial advice, but this company located in Boston is helped by a recent executive order unleashing basically drone dominance. The Trump executive orders can be kind of sensationalistic, but this company has a 6-fold increase in revenue year over year, and also an increase in gross profit, up to 25% from under 10% last year. So this company is definitely getting more efficient at using the money that they have. And the market that they're aiming to serve is getting bigger given this Trump administration connection and them being in this category of drone companies, including Unusual Machines, Red Cat, that have also been on pretty spectacular runs this year. So let's jump into Ondas. ONDS is the ticker. And it's not financial advice, but it looks pretty good right now, even as the market's down significantly.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, so this is the company. They also serve Israel and India. They're a drone company, so enough said. They did have some wireless data sort of applications as well. You know, like double checking different LLMs. But wireless and autonomous drone systems go hand in hand. A lot of times drones are just used to collect data. They're not always used for military purposes. But definitely some AI opportunities here. And this company, Boston, is definitely a high-tech center. And also relatively close to DC. So kind of all checks out. It is over a $2 billion company, and they don't need much cash. So they have almost 800 million of cash. They could raise money. They definitely have the ability to raise money, But if we look at the history of how they raised money, most recently, just a month ago, they raised 400 million at 11.50. So this is the chart. That was that raise. And yes, the stock is down since that day. The October 6th was when that was at 11.50. So right here, it pretty much marked the top, if we're being honest. But that's sort of behind us at this point, seemingly. And the reason it's interesting right now is they just recently had earnings. We can see those earnings right here, and it's at the end of the day. So we have this close to risk off of this $640 dollar value. And, you might be saying like, well, big picture, you get in low and this thing goes up. And my statement to you would be, the idea here is if we look at some similar earnings reactions, take Guardian Health, you can risk a level. Maybe it slightly undercuts it, but in general, it holds that level. Or if it doesn't, you get out. GM being maybe the best indication of how that level can be held. So that's the earnings day level. And ONDS, of course, way lower liquidity as an example, but there's the close, 640, and it's not that low liquidity. I mean, it's 200 million shares on a $5 stock. That's over $1 billion of money just exchanged today only. So tomorrow, of course, there'll be less, but still plenty of liquidity for anyone who's putting 10 million in this, and you won't move the stock. A few cents you will, of course, but nothing significant. So even though it's a $5 stock, don't underestimate the opportunity. Now, as far as that earnings, well, the revenue is not a lot, okay, but they did raise their revenue target to 35 from 25 million. Of course, they're losing money, but they're also a drone company that is just now getting the opportunity to fly their drones and sort of getting that administration, government connection where those contracts can be pretty big. So this is a big increase in revenue year over year. And that UAV, autonomous systems, generated that revenue. Makes sense. But keep in mind, this kind of is a wireless software, radio platform. So it's definitely pigeonholing into drones right now. And honestly, that seems like a pretty smart direction to go in. If we look at some of the other moves in some of these companies, the main ones being Unusual Machines, UMAC, which you can see is pretty similar sized. It's actually, the enterprise value is similar, but the market cap's a lot smaller. So the stock movement has been crazy though. All the way up to 18 from around $8. And then the other one being Red Cat. And these are just the recent moves, breaking up from around $10 up to like $15. Of course, they're selling off a lot, all these speculation names, USAR, MP, materials sold off significantly. But right now, these stocks are not interesting. RGTI, IONQ are just getting wrecked. So when you see a stock that has speculation potential, but it also already is down significantly and has recent earnings, it kind of gives a little bit of energy to this sector that has just been completely sold off over the past month. So I'm not saying this is going to relight the speculation sector, if you want to call it a sector, but I am saying that if there is a stock that's going to light up, it's going to be this drone company. And this is going to be the level to respect for that idea. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. You can work with me for $25 for 7 days.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right.
Which is great, and you get a huge melt up. But then what happens? Well, you're multiplying your gains to the upside, but you've also multiplied your losses when things are going down. And just like every percent increase is multiplied with margin, well, every percent decrease is multiplied with margin too. And unlike on the upside, well, on the downside, you could get margin cult, which causes these situations where you have these massive runs and then all of a sudden, boom, a crash. Now, overall, again, I think the entire year is backstop, so dip buyers are going to be nowhere in short supply. However, for folks that really just want to buy stocks and then just ride it slowly over time and then not have any volatility, this is not going to be the year for you. For folks that really want to grow their account and are comfortable with volatility, this is going to be a fantastic time, probably one of the best ever. You're going to see 2026 is going to be incredibly volatile, way more volatile than 2025 was. You're not going to see a consistent straight up line. You're going to see aggressive dips. You're going to see aggressive tests. You're going to see people fear-mongering about valuations at every new high. You're going to see Trump tweets cause mega crashes and corrections over and over again, not just one, not just two, but many different ones, because people are going to become way more sensitive in this new margin environment.
All right. 15 billion in revenue, up almost 10% year over year. Product orders rose 10%. So strong demand for AI infrastructure and networking. Cisco. This one stock is about to skyrocket. You're not going to believe the ticker I'm going to say. I'm not going to hold you hostage here. It's ticker symbol CSCO. That's Cisco. The same stock that had the massive run in the early internet bubble. I'm going to say the B word. This company is back and the revenue is up almost 10% year over year. And notably, product orders up as well, about 10%. AI connectivity products making a big segment of that product order category. So that's big to have this company be essentially reinvented as an AI connectivity company. These GPUs need to be connected, server racks need to be connected. Everything that Cisco's been developing for the last 2-3 decades is all being used at maximum scale right now. So the company is Cisco, and I think it's a solid bet on AI without having to bet on some pie in the sky unicorn. This is not financial advice. Let's jump in.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is the revenue, 15 billion, up 8% year over year. And the earnings per share, we can look at the result. I mean, it was an absolute rocket beat. So interestingly, some profit taking or whatever you want to call it today, but I think this might have gone sideways if not for the market going down like crazy today. So this is the drop in the market. I know it looks tiny on this scale, but when you zoom in, we just gave back a full week, or more depending on how you measure it. So to have Cisco holding up so well is definitely significant. Earnings, of course, just yesterday. So you have this close to risk off of, right where we are right now, 77 and change, and I think it's pretty strong considering this company. Has been around for 30 years at this point. I mean, even the 20-year chart, you can't even go back to the internet bubble 99, 2000 times. So I wasn't really, focused on stocks then, obviously, but I do know a little bit of the story. And to have this company be participating in what some people call the new AI bubble as well is pretty powerful. So let's jump into a little bit. I mean, before we jump into what these do, look at these other companies. ServiceNow selling off. Salesforce, not doing so hot. maybe the worst software name of all recently, Duolingo, getting wrecked. Maybe that was expected given, even though they tried to talk about AI, still it's not a super compelling offer for what is essentially a language translation company, which a lot of AI does anyway. I know it's a learning company. People do it more for fun than for necessarily career advancement, but still, scary moves for some of these software names. So to have Cisco holding up so well, it just shows that these connectivities, these AI connectivity, LITE and then LUMN, selling off recently, but big moves. Coherent, a big one as well, with strong earnings. This day just threw a wrench in everything, but this is a really strong move. And again, strong strength today, despite the market selling off. So these are the AI related orders, over $1 billion this quarter. And these are the orders in the AI infrastructure and networking. So big increase, as well as some buybacks and dividends. So we'll see what happens, but they're definitely in a refresh. And as a lot of companies talk about doing AI, they, I think, are actually positioned to participate in the AI build out, even if they're not making AI agents or, being the enterprise AI consulting company. They don't have to bet on that. They can just bet on all this CapEx is going into data centers, and they've been the company of choice for decades. So there are risks, sure. Security revenues down a little bit. There was actually a massive security breach today that Anthropic identified using. Anthropic is this Claude LLM. It has the valuation of about, 2 or 100 billion maybe, compared to OpenAI's 500 billion. So it's a massive company. I don't know why ChatGPT is trying to personalize this to me, but here's the deal. Cisco definitely seems like a strong idea, despite it sounding like an old sounding name. And these revenue numbers are very legitimate. So it's a massive company, of course, and I don't know how legitimate some of these NVIDIA partnerships are. Of course, every big company is going to partner with NVIDIA. At some point, it gets kind of exhausting, even just putting all the pieces together. But I do know that NVIDIA needs security, and as long as Cisco is somewhat positioned in the NVIDIA sphere and the OpenAI sphere, they're definitely going to have some growth. So edge computing is also a big deal. It sounds like a buzzword, but it's really important for security. So a lot of these big enterprises don't want to send their data to Google Cloud, to Amazon Web Services, to Oracle, right? They want it on their own premises. That's why IBM is also experiencing significant growth this quarter. The earnings reaction was a little bit messy, but big move up once that got straightened out. And a lot of this is because there's a lot of growth. The earnings per share actually beat in on-premises deployment for IBM, which seems like something out of 20, 30 years ago, which it was, and then we moved to the cloud. But with a lot of AI applications, there's a lot of sensitive consumer data, and sometimes these customer data can be other big companies or law firms or healthcare companies. So security is a big deal, and it seems like Cisco is leading in that category as well with this edge computing, which is a buzzword, but it has a purpose. So it's real. So that's the idea, CSCO. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want one-on-one help, head over to stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right. Let's see what else we've got cooking here. Alibaba and CVI. See if what else Charthy's got for us here.
People are going to become way more sensitive because valuations are going to be climbing. People are going to become way more sensitive because every dip is going to completely blow up some of the folks that were too aggressive into margin. So anyways, how do you protect yourself in this coming environment? Well, for starters, buy great assets at solid prices over time slowly. Don't change your opinion because of stock price fluctuations. Focus on the business versus stock price arbitrage. Most people look at a stock as an indication for how a business is doing, whereas you should actually be flipping that. You should be looking at the business as an indication for where the stock price is at. And if there's a mispricing, well, that's an arbitrage opportunity. Thirdly, you got to use volatility to your advantage. If a great asset gets oversold, buy it. If a great asset gets overbought, sell or trim it. And lastly, if you see rapid growth or rapid destruction over a short-term time span, don't feel too good or bad about yourself because long-term real value shines through. You can get lucky or unlucky over a short time frame, but if you're buying good assets at good prices over time and you stay with your convictions and you adjust your convictions for the times that you're wrong, well, long-term, those good practices will shine through. And
Okay, so CVI Energy is in Texas. They do refining, petroleum refining. So oil refining, majority owned by Carl Icahn. So I guess they also do marketing, but it doesn't really make any sense. Oil marketing, I don't know. Loss of 100 million. Talk recent. Definitely want the recent earnings. CVR Energy. Wow, earnings per share, big beat. Seems like. Earnings per share beat. $600 million of EBITDA compared to a $35 million loss last year. Okay. This stock will shock everyone. This company had $600 million of EBITDA compared to a $35 million loss last year. It's majority owned by billionaire activist investor Carl Icahn, and it's in the energy space, oil and gas, which is holding up well today. The price of oil is holding up well today, despite the market having its worst day since a month ago when Trump and Xi had their rare earth conflict, liquidated millions of altcoin, Bitcoin holders as crypto was linked to the market on that day. Since then, we've chopped around, but done all right in the market. Big down day today, notably energy stocks holding up. The ticker is CVR Energy, ticker symbol CVI. Let's jump into a little breakdown on this company.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so this is the company. They're in Texas. They do oil refining, but they also have an interest in sort of a marketing for nitrogen, a fertilizer business. So I don't know exactly how that works, but we're going to jump into that and talk a little bit about different business segments. So they have petroleum, gasoline, diesel, refineries in Kansas, Oklahoma, blah, 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 blah. Makes sense. Renewables, soybean and corn oil, making those into diesel, although they're turning that diesel unit back into hydrocarbon. Notably, this Wynwood location, they do get sort of exemption liability removal. So sort of a little green light from the administration. The EPA granted a small refinery exemption for that refining company. So that was good news for them. And throughput's up significantly in petroleum. Refinery margin per barrel improved. This refinery margin is a big deal, as well as throughput. This company, PARR, doing well in oil and gas. Dyno doing well in oil and gas in the last couple of months. But I mean, if we want to look notably at today, this is the green day today in crude oil, even as the market sold off significantly. So that's why some of these companies look really solid in oil and gas. CVI holding up, kind of making this shelf, you could say, selling off a little on earnings, but really solid level to risk off, 37 or so. And if we look at maybe one other oil company, Valero, this is the one that had 97% throughput after this earnings. You can see that reaction was really solid. So this earnings reaction, not super hot, but holding up well, and the earnings per share did beat. So definitely some rays of sunshine. And this company has been really strong this year. So kind of an undercut maybe of this level, an opportunity to buy maybe at 38. I mean, preferably it would sort of stabilize above that. But if you were to buy here, you could risk 50 cents or so and look for a $5 to $10 move. So that is basically the playbook for CVI. There's definitely some intrigue in the fact that they have Carl Icahn as their, well, majority owner. He is an activist investor, so that sort of checks out that he would be having a controlling stake. If we look at what they've been up to, well, let's take a look at kind of how they're doing. This guy is very steeped in lore, but he's also very smart, which is how he stuck around so much. So they do have a net loss of 100 million, and petroleum refining also having a pretty large segment of that. Nitrogen fertilizer showing strength. So despite all that, still paying dividends to Carl Icahn. And you know what? The regulatory boost never hurts from the EPA. And that Icahn just being connected to it does kind of make it a billionaire play. I know that sounds crazy to say, but it's a relatively low price stock. Not a penny stock. It was a penny stock. And so things like that can kind of have some energy to them. Hertz is another one that Bill Ackman has talked about frequently. That, I mean, this business is way worse, I think, than CVR. Although the utilization of their rental cars has gone up recently. So this reaction was solid. But anytime a stock is connected to a billionaire, Ethereum being another one, Peter Thiel backs this company. Tom Lee also connected here. Of course, it hasn't performed spectacularly at all recently. Ethereum, doing even worse, but this is just a leverage play on Ethereum. This is a common theme, though. The billionaire-backed plays. Open is maybe the best example of a large move in a speculative stock. Keith Raboy, I mean, you have to fact check me on that, but I think he's near the billionaire level. He's on the board. I think he's probably the chairman of the board. And this company has gone on an incredible run. So is CVI going to run like that? Well, probably not, but I mean, it already kind of did go 100% plus this year. So if it can stabilize here, as mentioned, it definitely has the opportunity to give another leg up. Of course, there's risks given that they had that $100 million net loss, and this activist investor could do anything. So you don't want to be trying to hold any longer than he has. But earnings per share did beat. We saw that adjusted earnings per share on the chart there. But this is the big deal number, in my opinion. 600 million EBITDA compared to 35 million loss year over year. That's a massive difference. And then if you look at it by segment, the fertilizer segment is solid. Petroleum, the big one, in renewables, not really hitting it too badly. It's kind of interesting this company has a renewables segment at all. I think it's probably just a little bit of a remnant of how this is kind of a Frankenstein company. I mean, they're talking about marketing, nitrogen, fertilizer. It makes sense that they're activist owned. But despite all that, the chart looks great. So if you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. And if you want $25 welcome offer, head over to stockscommunity.com.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's finish off strong here. Maybe a little bit more.
Finally, one big warning for 2026. Do not trade with money that you can't afford to lose. And that also means don't trade with money that is so much of your bigger picture that you won't be able to stomach inevitable swings. Because again, the people that do these two things are going to be absolutely destroyed next year because quite frankly, it's going to be a way more volatile year. Okay, next, I want to give you an update on a key play, AMD. So talk AMD Advanced Money Dispenser, Advanced Micro Devices. So CEO Lisa Su says AI business is going to grow more than 60% a year for 3 to 5 years. And a lot of folks are now screaming about this stock, but for context here, I've been yelling hard all year about AMD and really for years about AMD and the lopsided upside potential that it has, but I know it's long been an underdog. A second to Nvidia,
FXI.
people thought, why would I buy AMD if I could just buy Nvidia? And we've also been big fans of Nvidia, but a lot of folks just simply completely overlook anything that's an underdog. They only buy once everybody else has bought and everybody else believes in it, and at that point, a lot of the upside has already been erased. And I think this is a very important lesson now because AMD still is an underdog. But anyways, if you go back to my December 18th, 2024 video, I explained that AMD is going to really outperform in 2025 because of their hard pivot into the GPU market, the AI market, and as well as the strength in other core segments. And I explained that this is going to be an obvious winner. The argument I've always had is there's so much overflow of demand.
All right, let's jump into the last one here. Let's see if ChatGPT can not spasm here. Here we go. You guys have any comments on YouTube? Go ahead and drop those. Otherwise, we'll jump into a breakdown here. I don't know what is going on here with ChatGPT. Oh, I just didn't press this button. Singles Day. Strong. Yeah, Kathy Wood recently bought Alibaba. SoftBank owns 3%. Still. How much is Nvidia? Does SoftBank own? Let's see. Sold its entire stake in Nvidia. Okay. Talk recent Alibaba news related to Trump Xi. Okay. Unwavering support. Okay. There is one stock that is about to skyrocket. This company is a Chinese company. It's on an American stock exchange, of course. And the Chinese indexes, yin and FXI, are holding up well, even as the market sells off significantly, suggesting that investors are pulling money out of the big companies, NVIDIA, AMD, notably down. Also notably, SoftBank has a 3% stake. This is Masa, the big bet guy, in this company, Alibaba. The ticker symbol is BABA. That is the stock. SoftBank sold its entire NVIDIA stake to go, not all in, but to bet on OpenAI. So it just goes to show there's still a lot of interest in Alibaba. Kathy Wood also investing in Alibaba recently. So there's interest here. And given the Trump-Xi tensions, this stock has had a little bit of volatility recently, even as those tariffs were rolled back on the US's case and the retaliatory tariffs were unwound a bit. The stock is holding up despite all that. And Xi has mentioned he has quote unquote unwavering support for Chinese tech companies, Alibaba being one of the main ones. So even as Baidu sells off a little, Alibaba is strong today on a day where the market is really having a roughest time in just over a month. So let's jump into the chart. That's a long beginning preamble, but it's a lot of important information about a sector that people are often scared of investing in, Chinese stocks. But this is a massive company with 20-30% cloud revenue growth. It's the Google of, well, no, it's not the Google of China. That would be Baidu. It's really the Alibaba of China is what it is. So kind of like Amazon. Let's jump into a little breakdown here before I say more stupid stuff.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here's the chart. It's holding up despite some major unwinding, obviously, on those Trump-Xi disagreements around 1010. Interestingly, selling off came before the SPY noted that. And then after Trump and Xi met in South Korea on October 30th, some more selling off. So a little failed breakout today, but a failed breakout today is a total win. Big strength in the morning. Of course, this company trading a little gappy, a little weird. I mean, if you look at the Chinese indexes, oops, that's not it, FXI, and yen, they're holding up, and they're always a little gappy because this is a bunch of Chinese companies, and so the time zone is whatever it is, 18 hours off or whatever it is. So that's expected. So BABA's the stock of interest, holding up at this level, very clear risk level, pretty much from those 1010 lows. Testing once, maybe testing again yesterday. You do have to be careful not to hold a big position into earnings at the end of this month. But compared to its peers, Baidu, I mean, big sell-off today. Baidu, Chinese Google, not doing so well. Google, which is the American Google, selling off as well, even after a strong earnings result. Amazon as well. All these big Mag 7 companies sold off, of course, led by Tesla, unfortunately. So that's the worry. And if you're wondering where is money going, well, healthcare, still strong. Oil and gas, Exxon, Chevron, strong. Banks, pretty strong. I mean, a tough, rough day today, but in general, besides today, which is really rough, they had been doing well. So kind of a canary in the coal mine if these don't hold up, but they had been doing pretty well besides today. I don't know why Morgan Stanley is so difficult to see in detail on this chart, but it's kind of besides the point. So China stocks look interesting, and most interesting is Alibaba. So let's take a look at what this company's been up to recently and just make sure, kind of have a feel on who they are and what they're all about. So this is Alibaba, the e-commerce company. This is why they're not a direct analog to Amazon, because they do have this B2B marketplace. I mean, famously, for the internet native, they're the backbone of drop shipping, right? So that's kind of a little bit of a seedy underbelly, but they definitely have some strong, legitimate businesses. The cloud computing business is huge, 20-30% growth. And obviously connecting suppliers to buyers and being in China they're the faraway winner. So there's no other country where that would make as much sense. And, they do have, AliExpress is the retail marketplace I'm talking about. But they do have some other ventures, Alipay, Ant Group, that make this a lot more like Google. Google has Google Ventures. And, Google had self-driving cars. Not everything works out, but it sort of muddies the waters a little bit as to whether Google is a monopoly. And it seems like Alibaba doesn't necessarily need to worry about the antitrust thing as much, but definitely follows a similar playbook. So Kathy Wood recently made this investment, $25 million. It's not a huge percent of her fund, I don't believe, at all. But it is notable she bought somewhere in here. So after it was up significantly from this earnings. And I think it's pretty close to her average right now. So that's definitely notable. And then as far as the earnings, November 25th, definitely important. And these Trump-Xi tensions are going to be important as well. Xi definitely has, so far, pledged unwavering support. Of course, there's always the overhang of the Jack Ma situation from years ago. But as it stands, everything seems good. So this isn't a long-term bet on China. This is just a 1 to 3 month idea. But everything seems positive. It seems like kind of a truce. And even though the market sold off after that South Korea meeting on the 30th, which we can see in Alibaba's chart as well right here. All the talks were solid there. So it was just some profit taking, I believe. So that's the idea, Alibaba. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I'll post that in the YouTube posts once a month. And if you want help for $25 for 7 days on stocks, head over to stockscommunity.com. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.